On Tuesday the 18th of August, 2026, XRP slipped below $1, hitting a 21-month low and leaving the token roughly 70% below its all-time high. That is the stark headline. Yet on the same day, a Korean regional bank confirmed it was adopting Ripple payments. So we have a strange picture: real-world utility improving, while price action is at its weakest since late 2024. The contradiction matters, because it shows that short-term crypto markets are not currently trading on adoption news. They are trading on liquidity and risk appetite. Let us unpack what has changed. XRP closed at a 21-month low just under $1, yet on-chain data reveals a surprising surge in network usage. That suggests the decline is not being driven by users abandoning the network. Instead, the wider crypto market has paused. Bitcoin slipped below $64,000 as traders wait for consumer price index data, and that macro nervousness flows into every altcoin. When inflation data is due, leveraged traders reduce risk, and XRP gets hit harder because it has a smaller and more volatile order book. The Korean bank announcement is significant, but it is a slow-burning fundamental story, not a short-term price catalyst. Here is the most important signal. Global XRP whales added 1.23 billion tokens despite a 43% slump. Large wallets have seized the opportunity to accumulate over $1 billion worth of XRP during the summer drawdown. That is not retail optimism. That is informed capital positioning at a discount. But there is a catch. SBI Japan's report warns that low XRP prices work fine when volume is small. When institutional scale hits, a fixed pool of circulating tokens could face a supply squeeze. In plain language, once banks and payment providers genuinely need XRP for daily settlement, buying at today's depressed levels may become much harder. That is the longer-term structural story underneath the current price fall. In the near term, the focus is on whether XRP can reclaim $1 as a support level. Analysts are watching for a close above that mark to signal a potential recovery, but after a 21-month low, that requires a shift in risk appetite. The crypto market is unlikely to stabilize until traders digest the next inflation print and see whether central banks stay hawkish. If macro pressure eases, the combination of whale accumulation, rising network usage, and real banking adoption could catch the market off guard. If the sell-off deepens, the fixed supply and institutional demand argument only grows stronger. Either way, this is now a waiting game between adoption and liquidity. Here is the takeaway. XRP slipping below $1 is a price event, not a utility event. A Korean regional bank adopting Ripple payments on the same day is proof that the network's use case is expanding even while speculative money retreats. Whales are buying into that mismatch, and on-chain usage is climbing. The market may be staring at a 21-month low, but the structural story is far more interesting than the chart suggests. For viewers, the key is not to confuse short-term price with long-term fundamentals. That gap is precisely where opportunities and risks are found.